Hello, this is Ilan Awerbuch with Unitrust Mortgage in San Diego, and this is Mortgage Watch for February 10th, 2010. Well, I'm going to start a four-part series today. I'll continue it next week and the following weeks. My topic is going to be, are big banks bad? Now, most of us kind of have an idea of what big banks are. We've heard their names bandied about, but really, what are today's big banks? Some of us know that they're the largest institutions that the federal government decided were too big to fail. They are basically 5 big banks and 2 giant Wall Street firms that for all intents and purposes are also operating as banks. Traditionally, we understand banks as places that take in deposits and lend out money to people. And that's kind of how we've understood banks to be in our lifetime. But once upon a time, banks fulfilled very different functions. Did you know that before the Great Depression, banks often operated as speculators and as financiers? Before the Great Depression, banks often owned companies and sold stock in those companies and actually lent people money to buy stock in those companies. They also lent people money for other speculative purposes. And of course, the Great Depression crash put an end to all that. Soon thereafter, there was a bill enacted in Congress called Glass-Steagall, which prevented banks from operating capacity as financiers and speculators, and more traditional role of bringing in deposits and lending out money. Well, there's a lot of money and profit to be made in doing that, and if done well, again, it's highly profitable for banks and their shareholders. But in a few years ago, banks lobbied hard to have that act repealed. They wanted to get into more lucrative businesses like speculation on stocks, selling investments, and arbitrage. Also, a lot of modern big banks have been cobbled together from many different businesses that have grown and been put together. Citibank is a prime example of that, but really, all the largest banks and Wall Street firms that we're talking about are many, many large businesses that have been stitched together or cobbled together. And of course, self-preservation is their theme. They're a lot like transformers. They will mutate and they will grow in different directions to save themselves and to preserve what they have. Now, we know that in nature, predators go out and eat other animals. But basically, once they're full, predators stop eating. So they have a kind of a known cycle where they eat when they're hungry, and they sleep and rest up, and they may go out and kill again. If you saved a lion's life, do you think it would remember who you were and spare you in the future? I don't think these modern big banks have gotten any sense of ethics or anything else like that. Their sense of social responsibility is extremely limited. I'd like to ask you, do you think they owe their clients and customers anything in the way of fiduciary responsibility or any other kind of respect in dealing with them? Recently, Goldman Sachs announced that, of course, they were going to and could very well take financial positions directly opposite and against their own clients. That is, they are speculating and looking at deals for their own improvement, for their own profit, and for their own standard. Now, many of us think that that's really kind of inappropriate. Banks have the right to do that, and in banks, I'm including the 2 largest Wall Street firms that were saved in the recent crisis, Goldman Sachs and Morgan Stanley. But if these institutions are going to act in their own best interest and disregard the best interest of their clients, certainly their shareholders in many ways, it was announced recently, and I think you've seen it in the news, Goldman Sachs is basically keeping 60% of its net profit as income to be spread around to its management and staff, bonuses, profit sharing, etc. Morgan Stanley is a little bit lower, but still a pretty phenomenal percentage of what they've earned is being kept inside. We're seeing the beginnings of shareholder activity and beginning to fight back on that. But really, we have to see of all the things that banks have done in the recent crisis. Today, I wanted to set the tone for what the next sessions are going to be like. I'm not here to bash banks, but I'm here to take a look at what they do and how they do it. And at some point, I believe the government's going to have to come to the realization that these banks are not going to do anything that may be socially responsible or responsible to their clients or anything of that sort. They are predators. They are large, supernatural predators with many different books of business, many different businesses that many people didn't even know they had. For example, AIG and its far-flung operations, including some that brought the entire banking industry and the securities industry at great risk. In coming weeks, I'll be talking more about banks' role in the crisis and what they themselves did to bring all this on and what they're doing to perpetuate the crisis that we have. Next week, I'm going to talk about the bank's role in the subprime crisis. In the meantime, interest rates continue to be good. We see the stock market is still up and down with a lot of speculative upheaval. And as we try and work our way out of this, the government is still trying to figure out how it's going to rein in these banks and get some kind of order to what's going on. I'll also be discussing the loan modification world and what banks are doing there with people that they've lent money to. For now, I wish you a good week. This is Ilan Awerbuch with Unitrust Mortgage in San Diego. Take care and thank you.